Happy Friday, traders. It is a cherry bomb trade for you, your final one of the week. It's EWZ, the ETF that tracks the Brazilian economy. It has high liquidity, has an IV rank of 46, so I guess those are some juicy options. And it has a moderately strong positive correlation to the SPYs. We're going to take a quick look at the charts in just a moment, and I think you'll see it is going to be tough to be bullish or contrarian. But we're going to compare. Stick with us. I hope you'll stick with us to the end. I'm going to compare the performance, or we're going to try to compare the performance of two different types of short put mechanics. So if you're interested, I guess you'll keep on watching. If not, bye. Hi, everybody. My name is Neil. This is Option Theory, and thank you so much for joining us. Appreciate your views. And if you stick around to the end, I'll give you a like. It's going to look just like that. So cool. All right. On screen, you can see that we have the chart pulled up for EWZ. And notice pretty clearly here, I guess I can zoom in here, right? Let's go with zooming in like there. Since right about here, it has been on a downward trend. Since the end of June, we have seen lower lows and lower highs just creeping on in there, right? So you could say here to here, and then the highs there, right? So that would be the channel that we're stuck in there. And what makes this one different? I don't know. Maybe we're just going to keep riding it on down, and this put could hurt. So it's important to note that that is what's going on there, or what has been going on. And what's also good to note, though, is that yes, we were at a high of 42, and we've dropped since. The lowest low that we've seen, pardon me, on this chart is a 26. So pretty close to the short strike that we were given in today's cherry bomb. So with that said, let me go ahead and clear the drawings. Remove drawings. Yes, remove them. Awesome. Okay. So let's go ahead then and go on over to the Analyze tab, go to Add Simulated Trade. The trade as it was sent to us from Tasty Trade today has us in the November 26th weeklies. Now, you know, if you watch this channel at all and you trade with me and you do these cherry bombs along with me, you know that I'm not a big fan of weeklies, particularly for their open interest and liquidity. So here is the trade as it was sent to us. An 8-cent wide bid-ask spread. You click on the bid for the 27 put, which has a 20 delta and an open interest of, drum roll please, 10. Not a lot. So, however, I have had things that fill, even though you would not expect them to. So here's a short 27 put. Let's analyze this trade as it was sent to us. And of course, because this is option theory, we're going to test the theories here. We're going to put on the trade as the cherry bomb was sent to us, and then we're going to try in our IRA account, if I could find my mouth today, right? And then we'll see the difference. Hope you'll join me for that trade comparison too. All right, so let's get this date in the top right corner set to the same date you see in blue in the bottom right corner. That's November 27th. So now our expected move fits on screen. Let's get this gold price slice where it belongs, but rather than doing it manually, I'm going to choose set slices to break even, and then choose the blue date of expiration of 27th of November. That gives us an 81% pop, or probability of profit at expiration. That's a nice high pop. Of course, you're taking risk, right? This could chase all the way down to zero. I suppose if if inflation went crazy and that economy went to total and utter chaos, you could lose, some money, all of it, right? And what would that be? Hit and confirm and send, so you can see that. It's always important to know your risk going into something. You here could make 44 cents or $44, and you're risking essentially, let's call it $2,700, right? So interestingly enough, that max loss is about the low price. That's the break even is about the most recent low in the past 52 weeks. So I'm going to go ahead and I'm going to throw that into my margin account. So let's go and head over to the IRA. Let's build a similar trade, but try to follow a little bit more of what I call the Tasty Trade mechanics, what I think they would call too. All right, so I don't think we're going to get liquidity in these weeklies. We could look at the 28 days to expiration. We could look at the 56. I promise you the open interest. Let's just show you in the 42. There is no open interest going on here in these December 3rd weeklies. So we're going to completely avoid that. I should probably go back to this screen here so you could have seen that. So just in case you had a hard time seeing that, because I didn't zoom in, here is the 0 open interest in the December 3rd weeklies. So I feel that that leaves us torn between November 19th monthlies or the December 17th monthlies. And I feel like this is closer to that 45. So I'm going to go ahead and hit this December 17th, December monthlies. And then what I'm going to look for is a delta that's near that 16 delta. Oh, look, there's a 16 delta there. Fantastic. So, and plenty of open interest. So we are looking at a 7-cent wide bid-ask spread. That's kind of a bummer. Here's another 7-cent wide. Here's 5-cent wide. And so let's take a quick look at following the tasty trade mechanic of 16 deltas. All right, going to go ahead and hit the 25. Got one short put here. 57 cents would be the natural, so you could probably get a mid price here. If we went to 60 cents, you could probably get that. So let's dial that up to 60 and go ahead and hit the risk profile. Change the date in the top right corner to the same date that you see in blue here, which is the 18th, and get our expected move to fit on the screen. There it is. Set my price slices to break even. Yeah, and so there we're looking at an 88% probability of profit on this one. And that's pretty sweet there. One thing I forgot to go over, shame on me. Let's head on over to Tastyworks to get a little P50 action. So let's first get the P50 for where we were in the cherry bomb trade. P50, according to them, is an 89% probability of making $24, and this one before expiration. And let's clear that trade and go ahead on over to the 56. Click on, I believe it was the 25, right? And then that has us a P50 of 85%, a pop of 83. So a little bit different there in the pop there between the two. We had 88 inside of TOS, but I think that's because these numbers don't update like Thinkorswim does overnight like this. So I'm going to go ahead and right-click this trade, choose Confirm and Send, and it would help if I was in the right screen. There we are. There's the Confirm and Send screen for Thinkorswim, and on this modified short put, where we have a max profit of 60 rather than 44, and a max loss of 2,400 rather than 2,000, almost 700. Right? So I wonder which trade you'll prefer if you'll do like me and compare the two and the performance of the two, or the ability to manage them, right? Because they might go against us and you might need to manage it. And you might find that being in the weeklies, liquidity-wise, can be problematic. Test these things out. That's why we're doing this. I hope you're learning along with me. All right, going to go ahead and hit send, and that goes into my working orders. And I'm going to go back to full screen, and I'm going to say, thank you so much. Big thumbs up to you. If you feel I earned a thumbs up for this video, if you like this content, you can hit the like. If you dislike this content, there's a dislike. So yeah, there's that. So if you want to get these emails from Tasty Trade, head on down to the description below. You'll find a link, a bit.ly link, just so I know it gets clicked every once in a while. And you can go sign up for all of their email lists. If you want trade ideas sent to you 4 days a week, then you're going to want to hit that cherry bomb. If you're interested, come back and join us. Hit that subscribe button. You have a partner in learning, and we look forward to having you. Everybody have a great weekend, and I'll see you next week.